Okay, the elite banks wealth management stock buys are out. What the hell does that mean? Well, it's really exciting because what it actually means is which are the stock buys from these banks' wealth management divisions in the past week. What have they suggested that people ought to buy from Goldman Sachs Wealth Management, Barclays Wealth Management, and so on? And we're going to look at beyond that, what I call the non-special situations. What does that mean? It means we think there's at least a 40% reasonable target in the next 12 months based on the trend of the price being projected forward. The exit I will specify in the video where there is a multiple reward to risk, and I'll explain that in the video coming up. But it does not meet my usual great investments program special situation minimum criteria, which are value, growth, income, 7, 8, 9, or 10 score, because maybe the company's overvalued, it's not growing enough, and the momentum is not rising from an oversold position. So whilst it doesn't meet those two, it still has the 40% and multiple upside to downside. Let me give you an example of what I mean from the past week. The full list and the special situations, which are safer, are available for my Great Investments Program clients. This one, I'm just showing the public, non-special situations. Well, it was Bank of America that issued the buy note on this company. That's the projection forward. You can see why that's the projection forward. That would give 129%. Now, if you think that isn't going to be hit because it's overbought, then don't do it. Okay, this isn't a solicitation to invest in any event. We're looking at reward to risk of a factor of 2 to 1. Well, that's 120 over 12 months, that's 129 to the upside. A reasonable stop loss would be here. Therefore, it's only what, 20% to the downside, 120 to the upside. You've got multiple upside to downside, investment 12 months. Boom. Okay, simple. Let's look at another one. T-Mobile. Now you can see on that trend projection, you might disagree with this angle. You might say, well, closer to 50% over 12 months. It was UBS that issued the buy, which caught our eye. It's overbought, so it's not a special situation under my Great Investments Program. It's non-special, and you'd probably put a stop loss here, which means your risk is much lower than your reward. Why there? Well, you don't want a stop loss which is, say, just here because it get easily stopped out by noise. You don't want it here because it's so far down it's redundant. Okay, you want a stop loss which is the point at which, were the price going to continue on the projections you factored, it shouldn't go down and hit the levels there. That's where the stop is. And here's another interesting factor. You work out what that distance is, and that's how you work out your money management rule. How? Well, let me put it this way. Let's say you didn't want to lose more than £2,500 or $2,500 on a particular trade. And if that was a 25% stop, I don't know what the exact percentage is, let's say it was 25%, you'd only buy $10,000 worth because 25% 10,000 is 2,500, that's the most you wanted to lose. That's how you work it out. Service now, you can see the projection, that's what it would be. It was a Citigroup buy. You may disagree with it, and that's perfectly fine because it's overbought or for a host of other reasons. Where's that stop going? Probably around there. So you've got multiple upside to downside. You've got your money and risk management rules set in. Bang. Fantastic. Boeing, you can see why sometimes you just want to leave well alone. Because whilst you put the stop there, do you think it's going to stop? Do you think it could go lower? For those looking for really high risk, well, that's the angle. That's what you're looking for. Now, I'm not so sure. So which bright spark thought this was a buy? Well, it was the guys at UBS who said it's a buy. That's my projection based on previous returns. Not a good one. Not one I'd have a lot of confidence in. By the way, I wanted to mention with ServiceNow, whilst it has got a 7 on our value growth income, it is overbought. That's why it's not a special situation. Okay, so these were the non-special. There's a whole load more. For those on the Great Investments Program, you have got lots more. And you've got the special situations. They're live now. So if you're on the Great Investments Program, you've got all of that. If you don't know what I'm talking about, have a look at the links in the bio. Have a look at alpeshpatel.com/links, and that will explain what the Great Investments Program is and why you ought to be on it, particularly if your IFA or pension fund manager has destroyed your pension instead of seeing it grow as the market has grown over the past 2 years. Okay, I look forward to hearing from you.